You've probably heard the word asset 1,000 times, right? In the news, at work, when you're thinking about your own money. But what does it really mean? Well, today we're going to break it all down, nice and simple. And we're going to start with a question about something I'm willing to bet you have on you right now. So, take a look at your smartphone, the one in your hand or your pocket. Seriously, think about it for a second. Is that thing an asset? The answer is actually pretty revealing. So, what'd you land on? The answer is a big yes. Your smartphone is absolutely an asset. And understanding why? Well, that's the key to this whole topic. Let's get into it. To really get why your phone makes the cut, we have to start with the official definition. This is the foundation for everything else we're going to talk about. Okay, here it is, the textbook definition. An asset is a resource with economic value that an individual or a company owns or controls, expecting it'll provide a future benefit. I know, that sounds a little formal, right? So let's just unpack it. Economic value just means it's worth something. Owns or controls, that's easy enough. But the most important part is that last bit, future benefit. An asset is something that's going to help you out down the line. So really, that big definition just boils down to a simple 3-point checklist. 1. Do you own or control it? 2. Does it have economic value? And 3. Is it going to provide some kind of future benefit? If you can check all 3 boxes, you've got yourself an asset. So your phone, you own it. You could sell it for cash tomorrow. And it helps you work, connect with people, learn things. That's a whole lot of future benefit. So check, check, and check. All right. Now that we've got the basic idea down, we can start putting assets into different buckets. And the first, biggest way to split them up is to ask a super simple question. Can you touch it? This brings us to tangible versus intangible assets. And look, the difference here is exactly what it sounds like. Tangible assets are physical things. You can see them, you can touch them, you can trip over them. Intangible assets, on the other hand, don't have a physical form. You can't hold them, but their value is very, very real. It comes from things like ideas, legal rights, or even a good reputation. Let's make this real with some examples. Tangible stuff is easy to picture. Cash, a car, a house, a piece of land. Intangible assets are things like a patent that protects an awesome invention, or the copyright to a song you wrote. Or think about the value of a famous brand's logo. You can't touch that recognition, but it is an incredibly valuable asset. So, besides whether you can touch it, there's another major way we categorize assets, and this one is all about time. It's the difference between current and non-current assets. The magic number to remember here is 1 year. Current assets are things you expect to either use up or turn into cash pretty quickly, within a year. They're all about your short-term financial flexibility. Non-current assets, which you'll sometimes hear called fixed assets, are your long-term players. These are the things you plan to hold on to for more than a year, and this applies to everybody, from you to a massive corporation. For you personally, the cash in your checking account is a current asset. Your house or your car, that's non-current. For a company, all the products sitting in their warehouse, that's a current asset. But the factory that made those products, that's a non-current asset. And this really matters. A bank might look at a company's current assets to see if they can pay back a short-term loan, but they'll look at the non-current assets, like buildings, to back up a huge long-term loan. It's all about matching the asset's lifespan to the need. Okay, so we've got definitions, we've got categories, but why does any of this actually matter? What's the point? This is where it all connects back to your life and your money. This is the so what of it all. It's really simple. Understanding what your assets are is the absolute first step to understanding your own financial health. It's like learning the basic vocabulary of building wealth. Think about it. Your assets tell a whole story. They're half of the formula for your net worth, which is just everything you own minus everything you owe. For a business, having a lot of quality assets signals that they're stable. When you go to get a loan, the bank is looking very closely at your assets to see if you're a good risk. And here's the best part. Some assets, like investments or a rental property, have the power to actually generate more income for you. They're not just sitting there, they are actively working for you. So I'll leave you with this to chew on. Now that you know the definition, what's your most valuable asset? Is it the money in your bank account, your house, or could it be something intangible? Think about your skills, your education, your experience, all things you control that have huge economic value and will provide massive benefits for your future. The answer might be a little different from what you thought when we started.